So back to the capital gains, short term, long term. If you sell under a year, you what's it called? Under a year, you pay between 0 to 37%. Is over a year, you pay 0 to 20%. Like I said, under a year is taxed as ordinary income. So if I made it $120,000 as my adjusted income, and I made $20,000 selling buying stocks within the year, under that year, I'll be taxed 120 plus 20 becomes 140. That's how it becomes ordinary income, right? But if it's a long-term investment, if it's over a year, then the tax rate will fall between 0 to 20%, depending on what my income falls to. So that's how that works. Then we talked about the 1031 exchange. That's one on the real estate side of it. When instead of I don't want to pay capital gains within a period of time, 60 days, 45 days, and 180 days, I can reinvest that money in like kind.
For the benefit of those that are joining us, let me explain to you what the 1031 exchange is again. A lot of this investment gurus online, they say reinvest in real estate, and one of the justifications for investing in real estate is very simple. When you invest in real estate, you can claim all your repairs. Okay, but then you don't pay taxes. You just defer the taxes. Put it on a 1031 exchange, defer the taxes. Now, caveat, be very careful. When you buy a property, 100,000, you bought the property, you made a repair of 30,000. Yes, the property is now 130,000. They're not gonna, you can't claim the repairs, all right? And you sell for 160,000. That's $30,000 gains. Now, is what Funsho believes is the best is pay your taxes on that 30,000, right? People say, oh, you can defer. Yes, you can defer. But here's the thing. If you defer and you lose that money or you lose it all, IRS is going to stick you with a bill.
It's still coming,
because they're not interested in your losses. They're interested in your gains. That's what Funsho is saying. They're not interested in your losses. They're interested in your gains. But if you're doing this as a business, like you have a company that has a series of property, does that still apply? Or are you going to be looked upon as holistically? Because if I have 5 properties, I expect, I have a series of properties. I expect to make gains in some and to lose in some. Especially if you're doing fixer-uppers. Fixer-uppers is when you buy a property, you renovate it, and you sell. Trust me, as much as people think that is an attractive way to invest, it is fraught with danger, and you can lose your money. You're always one deal away from losing your money. All right? But if you're doing it like you're doing 10, 20 properties at the same time, and you're juggling all this together, is the IRS going to look at it individually that you make gains on this one, you must pay, you made loss on this one, we don't care about it? Or they're going to look at it holistically?
So to answer that question, that's where the tax strategy comes in. You must have a tax planning in place to know, are you trading? Are you in business? You're generating rental income? This rental income, how will it be reported on a Schedule E or a Schedule C for an individual? Or are you a corporation that does rental trading? They have multiple properties. They can take ordinary and necessary expenses on these properties. At the end of the year, they only pay 21%. When they make sale, there's no capital gains. They pay 21% net on taxes. That's how that works. I don't know if that makes sense. That pay 21% net on taxes. But as an individual, if I have multiple properties, I have a primary home, I decide to invest in 2-3 extra properties, that does not make me have a business. It depends on how I report it. It doesn't make me hazard. So at the end of it, I still report my properties on the Schedule E. I have all these properties that is reported. I still pay. It's going to be capital gains. I'm paying. That's what I'm paying. So at the end of it, that's what I'm paying. You can claim property taxes, mortgage interest deduction, real estate taxes, transfer fees, and all that. If that business is, if it's a business, I don't know if it makes sense. If it's a business, yes. But if it's not, it's going to report it on the Schedule E. There's still a peg onto what I can claim in terms of the expenses.
Okay, so basically, in the scenario I described,